Start with what is confirmed, because the confirmed facts are alarming enough without embellishment. Belgian prosecutors have opened a formal investigation into Wise Europe NV, the Belgian registered subsidiary through which Wise processes all European transactions. The investigation is, in the prosecutor's own words, at an advanced stage and nearing its conclusion. A court summons has been issued to Wise. The company has confirmed receipt of that summons and confirmed it is cooperating with the Brussels prosecutor's office. The trigger was data that prosecutors could not ignore. Wise accounts appeared in hundreds of cross-border law enforcement cooperation requests originating from more than 30 countries across Europe. The transactions flagged in those requests amount to approximately 500 million euros. The suspected underlying offenses span fraud, drug trafficking, and corruption. The Brussels prosecutor's office stated directly, the findings primarily concern the use of Wise accounts for criminal purposes, with indications of non-compliance with anti-money laundering legislation, particularly due to a failure to identify customers and their activities. That is not a vague regulatory concern. That is a specific allegation of customer identification failure at scale. Wise's stock market statement was carefully constructed. It confirmed cooperation with the Brussels prosecutor and noted that the inquiry is still incomplete. Around 1/3 of Wise's global team is dedicated to financial crime compliance, the company said. Investors should read that figure as both a genuine operational fact and a defensive framing choice. One detail that sharpens the picture: this is not Wise's first formal compliance intervention in Europe. In 2022, a review by the National Bank of Belgium found that Wise did not have proof of address for hundreds of thousands of customers. European regulators subsequently required Wise to implement a formal remediation plan over its anti-money laundering controls. More recently, multiple U.S. state regulators fined Wise $4.2 million over deficiencies in its AML controls. The Belgian criminal investigation is not the beginning of the compliance story for this company. It is the escalation. The Financial Conduct Authority, Wise's primary UK regulator, has confirmed only that it is aware of the situation. It has not announced a parallel investigation. That absence is being read by some as a positive signal. It is not a clearance. The FCA routinely waits for foreign proceedings to develop before deciding whether to open its own inquiry. An escalation in Belgium to formal charges would almost certainly trigger a review process at the FCA and at other national financial intelligence units across Europe. Wise's shares fell as much as 20% on the day of disclosure, before recovering to close down approximately 8%. The market cap loss in the initial trading session exceeded £2 billion. The shares are now approximately 33% below their 52-week high, back to levels last seen in 2023. Wise moved its primary listing to the US in early 2026. The London listing is now secondary. That structural change does not affect the regulatory exposure, but it does affect which investor base sets the price.
The deeper question raised by the Belgian investigation is not whether Wise broke the rules. It is whether Wise's business model makes rule-breaking structurally difficult to prevent. Wise built its business by removing friction from international money transfers. Banks charge high fees and apply slow processing times to cross-border payments. Wise charges close to nothing, uses mid-market exchange rates, and settles transfers rapidly. That proposition won 19 million customers, processes 4.7 million transactions per day, and generated over $243 billion in cross-border transaction volume in financial year 2026. It also, the Belgian investigation suggests, attracted something the company did not design for: bad actors who recognize that the same low-friction, low-cost, rapid settlement infrastructure that legitimate customers value is equally valuable to those moving money from fraud, drug trafficking, and corruption. Wise's response to the compliance challenge has been to invest in automated KYC and transaction monitoring technology. The company argues this investment is working. Suspicious transactions were flagged internally, which it says demonstrates that the monitoring systems are functioning as designed. Here is the flaw in that argument, and it is a flaw that EU law explicitly addresses. Under the EU's anti-money laundering directives, specifically the 5th AMLD, the obligation on a regulated entity is not merely to flag suspicious transactions internally, it is to report them to the relevant national financial intelligence unit in a timely manner. Internal flagging that does not result in external reporting to authorities is not compliance with EU AML law. It is at best half of the required process. Belgian prosecutors appear to be asking precisely this question: were the suspicious transactions that Wise's monitoring systems identified subsequently reported externally to national FIUs across the 30-plus countries from which law enforcement requests originated? The prosecutor's statement names a failure to identify customers and their activities. If prosecutors also find that Wise filed suspicious transaction reports internally, but failed to escalate them to national authorities, the company faces serious exposure under the 5th AMLD. Wise's management has repeatedly used the phrase, "controls are working as designed." The buried assumption in that phrase is significant. It assumes that the design, internal flagging followed by internal case management, meets the external reporting obligation under EU law. That assumption is precisely what the Belgian investigation is testing. If the design is the problem, then the controls working as designed is not a defense. It is the description of the problem. The broader implication for investors is this: if Wise needs to add meaningful friction to its compliance process, more rigorous KYC at onboarding, longer settlement times for flagged transactions, proactive external reporting to 30+ national FIUs, those additions carry a cost. That cost is not only financial, it is potentially competitive. The low-friction model is the product. Adding compliance friction changes the product. The degree to which Wise can retrofit adequate AML infrastructure without degrading the customer experience that generates its revenue is the fundamental business question this investigation has placed in front of investors. No analyst has yet published a model of what a materially upgraded compliance infrastructure would cost Wise in revenue or margin terms. That absence is itself a risk to the current consensus earnings picture.
Investors who have watched other European financial institutions navigate AML enforcement actions have a reference set to draw on. It is imperfect, but it is the best available frame for sizing the financial exposure. Deutsche Bank paid $630 million to US and UK authorities in 2017 to settle AML and sanctions violations. ING paid €775 million to Dutch prosecutors in 2018 to settle a case involving systemic failures in its AML processes over multiple years. Danske Bank, whose Estonian scandal involved flows of approximately €200 billion, paid $2 billion in settlements, but that case was categorically larger in scale and involved a bank with a far larger balance sheet. Wise's situation is distinct in scale. The suspicious transactions under investigation amount to €500 million, roughly 0.2% of Wise's annual transaction volume. Revenue for the year to March 2025 was approximately £1.2 billion. Net profit was £476 million. Analysts at Berenberg have estimated that AML fines in prior European cases have ranged from 0.5 times to 2 times annual revenue. Applied to Wise's £1.2 billion revenue base, that range produces a penalty estimate of approximately £600 million at the low end and £2.4 billion at the high end. The low end is clearly manageable against a £476 million annual net profit. The high end, which would require a finding of willful and systemic non-compliance over multiple years, would be existentially challenging for a company with a post-sell-off market cap of approximately £8 billion. The more realistic central scenario sits well below the high end. Belgian prosecutors have issued a summons, not charges. AML investigations of this complexity typically run for 1 to 3 years before a formal charging decision is made. Wise has the financial position to fund a prolonged legal defense and implement compliance remediation simultaneously. What the financial anatomy does not capture is the indirect cost. Compliance mode is expensive in ways that do not appear in penalty estimates. It typically involves bringing in external legal and consulting firms at scale, implementing enhanced transaction monitoring, potentially restricting certain high-risk customer segments or geographies, and diverting senior management attention from growth. Wise's growth story, the expansion into new markets, the business banking segment, new product lines, runs on execution momentum. A multi-year regulatory cloud does not stop that execution, but it slows it and raises its cost. There is one further number worth noting. The €500 million figure in the investigation relates specifically to transactions that surfaced in cross-border law enforcement cooperation requests from 30-plus countries. That is not the total of all potentially suspicious transactions processed by Wise Europe. The total universe of transactions that Wise's own monitoring systems flagged internally, but which may not have been reported externally to national FIUs, could be materially larger. That number has not been disclosed. It is a variable that investors cannot currently size, and it is material to the upper end of the fine range.
At 8.05 pence, with the investigation confirmed and the initial shock absorbed, investors face a decision that cannot be deferred indefinitely. There are 3 coherent positions. Each rests on a different buried assumption about the same unresolved factual question. The first position is to sell. The thesis here is that the Belgian investigation is not a contingent, isolated incident, but an early signal of a structural compliance deficit that the business model makes extremely difficult to resolve without self-harm. The bull case for Wise has always required believing that the company could scale rapidly while maintaining adequate AML infrastructure. The investigation is evidence that this assumption was wrong, or at minimum that the market was pricing the stock without adequately discounting regulatory risk.
The buried assumption in this position is that the compliance deficit is structural, not episodic. If the design of the internal reporting system is itself the problem under EU AML law, then the controls working as designed is a confession, not a defense. If that assumption is correct, the price at which you sell matters less than the fact that you sell. The second position is to hold. The thesis here is that the investigation represents a quantifiable, bounded risk that the existing financial position can absorb, and that the 13 to 20% single-session drawdown already prices in a meaningful fine. Wise's fundamentals, 19 million customers, £1.2 billion revenue, £476 million net profit, have not changed. The FCA has not opened an investigation. Belgian AML cases take years. Management states that controls are functioning. The buried assumption here is that the internal flagging argument holds partial weight with regulators, but Wise's monitoring systems correctly identified the relevant transactions, and that the question is procedural rather than systemic. If that assumption is correct, the penalty is likely in the lower portion of the fine range, and the investment case remains intact. If it is wrong, the situation is materially worse than the hold thesis assumes. The third position is to buy the dip. The thesis here is that the 33% discount to 52-week highs is an overreaction to a regulatory risk that will ultimately prove survivable, and that prior AML cases at Deutsche Bank and ING did not produce permanent deratings. Wise's net profit gives it balance sheet resilience to absorb a fine in the hundreds of millions. At 805 pence, the market is implicitly pricing a scenario materially worse than a central case outcome. The buried assumption here is the most aggressive, that the compliance failure is limited, contained within the Belgian jurisdiction, and that no further regulatory escalation from the FCA or other European authorities materializes. That assumption is currently unknowable. The question that determines which position is correct is not the size of the fine. It is whether Wise's internal suspicious transaction reports were also filed externally to the relevant national financial intelligence units across the 30-plus countries implicated, or whether they remained internal. That is the pivotal legal question in the Belgian investigation. It is not yet publicly answered. There is one forward checkpoint that will move the probability distribution significantly. Belgian prosecutors stated their investigation is nearing its conclusion. Watch for any escalation from court summons to formal criminal charge. A formal charge would almost certainly trigger FCA engagement and would change this from a monitoring situation to an active investigation situation for most institutional investors. Watch also for any voluntary disclosure from Wise about its external STR practices. If the company states explicitly that it files suspicious transaction reports to national FIUs as required under the 5th AMLD, that is a material positive for the hold and buy thesis. If Wise continues to use only the controls are working as designed framing without addressing the external reporting question directly, the ambiguity persists. The share price at 805 pence is pricing an ambiguity. The original IPO valuation in 2021 was £8.75 billion. The company now trades at a modest discount to that figure 5 years of growth later. Whether that represents a compressed entry point or a delayed re-rating depends entirely on which buried assumption the Belgian prosecutors confirm. Every day after the close, we publish a market wrap and key issue analysis. Subscribe to the channel.